Good morning, traders. So today we've got a new strategy that I've come across that is making me consistent profits in the AUD USD market specifically. So we're going to go over it, and it's based off fair value gaps at key levels. So you want to mark out key levels on the 4 hour first, and then you want to find all these previous highs and previous lows that could be points of market reversals or points where the market decides to shift. So going straight into it, we've got a key level here and we've got a fair value gap that's formed, a bearish fair value gap at this key level. Now price is currently pushing up and not respecting the fair value gap. We're going to wait to see. So as you can see here, it respects the fair value gap and you can see price moving. We're just going to show how price moves up and down at these levels so we get a better understanding when taking trades. Now I took 2 trades in this day and they both made me lots of profits. So I'm going to go down on these trades and explain them to you. Just show you how the market moves with price and what happens at these key levels. So as you can see, it really struggles once it's pushed through a key level significantly to come back up to that key level in a short period of time. So as you can see, these previous highs that are marked that are now previous lows are really the key indicators of price pushing up and down from obviously previous highs or previous lows. So we can see here a push up, and we look to see in our fair value gap where the significant entry point is. Looking at significant entry point, we have a bearish engulfing candle here that engulfs all that small movement in the fair value gap. And our second candle, just to confirm that, is our confirmation candle. Now this is going to be our entry candle for when we're pushing through. As you can see, it also changes the character of the market here, changes the character of the trend, signifying we're in a great position to be in the downtrend here. Let's jump on a trade. So our stop loss will be placed just above the candle because if it comes back up and retests that fair value gap, that's a clear indicator that you're probably in a losing trade. So small loss and you're taking profit. Profit one at this first previous low. Well, it says previous high, but it's previous low. This first previous low, and the second at the second. So generally, I won't bother going to the third in these situations because it's already a 3-to-1 R or a 5-to-1 R. I don't really go for anything massive like 20-to-1s. So just explaining that. Now, after that trade, we've got a second one that's formed from the previous trade. So this second fair value gap, as you can see, it's been tested once and it comes back up and it gets respected twice. So we're waiting again for that engulfing candle, which is seen here. As soon as we see it, we go, let's enter the trade. But because this is such a long candle, you're not going to be taking profit at a 1-to-1 ratio. You're going to be looking for that next big key level in which we wait and we look for in that next key big level for a 4-to-1 R. 2 very simple trades using fair value gaps at these levels. Now what I'm going to show you here is the profits, how I've made it. I'm on a 50k funded account here. As you can see, 2,941 up USD, 75% win rate, and we are closing in on that 4k profit target quite quickly. Now if I go down to the trades here, I've technically only really took about 4 trades this entire time because I like to increase the lot sizes on my winning trades, and my losing trades I like to get out quite quick. So you can see there's a few trades here that are the exact same time are the winning ones, and the losing ones very small losses. Losing around 0.5%, winning around 3%, so very good difference in the wins to losses here. Just to further reinstate how effective this strategy is. That's it for today, and I'll catch you in the next one. Thanks.